a lot of the conventional tools of technical analysis, I found in my own experience here, can often be misleading traps. If ever you've heard of one of my webinars before, or my colleague's webinar, Sam, you'll know that we like to talk about things from an institutional point of view. You know, what do the institutions do? How do they approach the market? How can we emulate them in more of a reliable fashion? Okay. Be aware. Well, the first way is to just be aware. You know, be aware of information and education that's out there. I've kind of made it my duty and one of my passions to try and educate people in the ways of the market, to do it in a safe manner, because there are many obviously dangerous ways of going about it. And one of the safest things to do is to kind of be aware that if you're using the same tools that everybody else is using, it's going to be more of a challenge for you to get the results out of the market that you necessarily want. I draw your attention right now just to this particular slide that I've got in front of you here. These are some screenshots actually from a broker's educational site that you're seeing here. And what I found this, I was like, wow, you know, this is something, you know, people need to be aware of. It was a little bit about basic technical analysis. And what struck me is really kind of stood out more than anything else. Again, and I'm not in any way, shape or form attempting to kind of put somebody down, but I just think from a trading point of view, I was looking at these examples, and there was an example of what a great buying opportunity looks like. And there's this chart. This is just a screenshot of it. It was a chart, and they were saying, here's resistance. If price goes above resistance, that's a great buying opportunity. Or you can see price support across here. This is a great selling opportunity. Now, I'm familiar with breakout traders. On occasions, I will take a breakout style entry. And if you're wondering, if you're newer to this, what a breakout style entry is, it means selling when new lows are created. So as it breaks through the lows, sell here. It's a momentum style play. Does that make sense, guys? Or an upside, it's a momentum style buying opportunity. So you see you've got this high that keeps being put in here. Once price breaks above that high, then buy it. Well, to me, it struck me. I was like, well, I instruct my students to do the opposite. I get my students trying to buy down here, down near these lows, because then they've got all this profit margin between these lows and this resistance line as a profit target. And then if I'm trying to get my students to sell near the highs, okay, because if it does break down, they've got a much better profit margin. Does that make sense? I like to try and buy low, sell high, because I figured to myself, well, someone's got to kick off at those lows, haven't they? Someone's got to be in there from the start. Someone's got to be, you know, taking the opportunity at the lows. So why would I go buy after everybody else has bought? There's a danger in that, because the thing is, I don't like buying too high. I certainly don't like selling too low, because in my experience of doing it, I've had my wrist slapped a few times. Maybe some of you guys kind of know what I'm talking about as well. Now, don't get me wrong, breakout trading has its play on here. It's a very typical thing. Well, what's happening is we're relying on the momentum to take us through. And I say it's kind of like backing a horse after it's already run half a race. Does that make sense, guys? Yeah, by buying after it's already gone up, I'm backing a horse that's already run a part race. So I kind of want to get the horse fresh, if that makes sense, yeah? Try and buy it when it comes right out of the gate, at the lows or right at the highs, yeah? Sell it at the highs. One of the first things, and it's just something to be very aware of. But then you kind of got to think, right? One of the key things to take away when you're trading, especially if you're doing this for a living, you know, like myself, I'm trading every day. This is my job. You know, I try to think a little bit differently. I try to go to the market and go, well, you know what? If most people are being told by the breakouts, who are they being told by? You know? Who they've been told by? Well, is it in that person's best interest necessarily? I'm just a question asker. I try to look at everything and then take something from it and then look at it in that particular way. It's also like this, some of these classic chart patterns. And again, I've only got a couple of slides, and then we'll go over to charts and we'll look at this on charts because I think it's the best example of doing it. But as we go through this, you might start to recognize some of these things for yourself and say, hey, you know what? Yeah, I've looked at that. Because anything I've looked at here, guys, I'm no different to you. Okay. I've, you know, was introduced a lot of these concepts very early on in my trading career, very early on, and I relied on them. But then suddenly some things started to stop making sense. Let me explain what I mean. You've got 4 classic chart patterns here. Okay, reversal pattern, a head and shoulders, a reversal pattern here in the double top, another reversal pattern, the double bottom, and a cup and a handle, which is kind of like a continuation pattern. Some people go, it's like a bull flag, and there's all these different things you can do. We'll just take a look at these here. One of the things that strikes me personally as being a little off about these patterns here is specifically on here the nature of, again, where the patterns are inviting us to buy and sell. Yeah? Hey there, Walker. Glad to have you here. For you guys who are just coming in the room, welcome. Thanks for joining us. So it's the timing that bothers me. You know what I mean? So let's take the head and shoulders. You know, the classic head and shoulders pattern. I mean, this is a beautiful one, right? I think this is one of the cleanest looking head and shoulders I think I've ever seen. It's so textbook. If you go onto like a website like investopedia.com, you know, put it in there, you'll get it. You know what I mean? But right, they're selling after the move. You know, it's all very well and good saying, well, here's a great place to sell because now you've got the confirmation of the head and shoulders. Well, I liken that to kind of getting to the party late. You know, I don't like to get to the party too early and be the only one there, but I'd rather be there earlier than later because I want to get there when all the good food's still around, okay, and when the drink's still when there. I don't want to get there fashionably late trying to be cool and then join after on and there's no food, no drink left and everybody else is going home because they've already had the party. You know what I mean? You can see how I like to do an analogy. I like to socialize, okay? So I use an analogy of a party. Or, you know, just again, being the last one, just being the last one to the sale, you know. I mean, you've got kind of like, I guess like, you know, Black Friday in America, you know, after Thanksgiving this Friday, in the stores and the internet's open. No one wants to be the guy or girl at the end of the queue. You don't want to be the one at the end of the line going into the store because the people ahead of you are going to get the good stuff and you're going to be left with the stuff that no one wants. It's always about being too late. Yeah, so again, selling after everybody else has sold doesn't make sense because my question is, well, who am I selling to? I'm selling to somebody who might be prepared to buy down there. Is my sell at this particular point, yeah, going to be to the person who sold up here? Am I selling to the person who went short up here and needs to now buy it back? Is my trade somebody else's exit for profit? That's the way my brain works. Is my trade somebody else's profit? Does that make sense, guys? Is my trade somebody else's profit? Because the danger is after everybody's done the selling, you're going to get those reversals, right? Look at the cup and handle. Again, buy the breakout. Well, again, did somebody buy down here? Well, yeah. Of course somebody bought down here. In fact, somebody with a lot of orders, a big inventory, and a lot of capital was trying to buy tons down here. How do I know that? Well, I know that very simply because the price did not stay here. Then they dipped in here. Then they tried to buy here. Then they tried to buy here. And they tried to buy. Well, they've been trying to buy all the way up. Well, the problem is as the price goes up, my risk is beginning to increase because I haven't got as much leniency with my stop. My reward is decreasing because I'm already giving it away. I mean, it's only like looking at a supermarket like Sainsbury's or Tesco's in Europe, Walmart in the United States. Now, these companies make their money by buying low. They make their money by buying goods at wholesale prices. And the cheaper they buy it, the less risk because they're not putting as much capital at stake. And also the greater reward. The lower you buy it, the less it's got to go down. The higher you sell it, the less it's got to be able to go up, right? And also then you've got a greater profit margin. So I just invite people, you know, to look at the market and maybe, you know, ask themselves the question, you know, was somebody buying down here? Was somebody actually selling up here where this red line is? So why am I being told to sell here? Well, this is the institutions that are kicking these big moves off. And this is where there's a flaw in technical analysis. Because, guys, when do you really know it's a head and shoulders? Somebody tell me. Yeah, somebody tell me. When do you actually know it's head and shoulders? When do you confirm it's a double top? Right, there you go, Ray. Good. After it forms. See, you know, there's no point in looking at it and going, wow. You know, there's a great cup and handle. There's nothing to do with it now. Yeah, it crosses the neckline, as Tommy's saying, after it's happened. Exactly. And that just seems to me, doesn't sit right with me. Yeah, it doesn't sit right with me. I'm saying, you know what? I'd rather have it. Now, being aware of these chart patterns, is that useful? Absolutely. If you're willing to buy low and sell high. Yeah? Okay?